This could break the back of the stock market. Yes, ladies and gentlemen, once again, the Bulls and the Bears are duking it out. Finish him. You're watching the Stock Market Brief Show. My name is Michael Silva. We're hopping right into this show. What am I talking about that can break the back of the stock market? Look at the bonds. Holy crud. 40.67 was the low. It closed at 41.27, which is what? We're looking at the TNX. This is the 10-year yield. 4.12%. It's breaking out. And surprisingly enough, the S&P 500 is holding up relatively well right now, and it's quite constructive. So you might think that this is a very bearish episode or bullish because it's kind of going to go both ways here. TLT, if we take a look at this, that hammer candle that we pointed out yesterday, absolute crush to the bond market. How much more can the stock market, take of this damage? Now, as we were down 1.82%, just incredible moves to the downside in bond markets, absolutely crazy. The TLT's expected move for the week based off of implied volatility the lower level is 95.73, and if you can zoom in right over here, we're not too far off of it, right? 96.53. We're about a buck away, a little bit less than that. So that's going to be something to pay attention to because perhaps, which we'll get into Tesla too, it looks like it can put a drag on the market. If TLT comes inside to that lower expected move and it kind of bounces, it might settle the S&P 500 off, and we'll look at some more price levels there momentarily. But not only that, look at the dollar. The dollar looks primed to just really start breaking out right now. Let me use a different, just breaking out of this area. It's holding that 20-day moving average. The higher lows, higher highs continue to hold. If this does start to take off, right, that can break the back of the stock market too as well. So we got high yields, we got a high dollar. These two things right now, they're not good for the markets. Like, they're just not good overall for the stock market, S&P 500, growth stocks, whatever you want to call it. And then if you wrap this all together and you look at volatility, I'm not going to dig too much into this because we talked about it yesterday, but volatility hasn't really subsided all too much. It's still trading above 30. So this is an area to be very careful. This is where you can see 2% moves in the S&P 500, which is unhealthy, right? And we can see those happen on a daily basis the longer that we stay up here, okay? If you look at VXN, this is NASDAQ volatility. It's in the 30s, mid 30s. That's very high. And then Russell volatility is in the mid 30s as well. So it hasn't really taken off like a rocket ship, right? It's been kind of just, for the last 4 weeks going sideways, but the market as well has been in this very tight consolidated range. And you can see that here visually on this chart. So if you take a look here, this is this SPY on the 15-minute time frame, and you can see it's in this chop box. This chop box has been pinging around, and obviously the longer it stays in here, right, the more open interest that it builds and the more potential of some sort of a gamma squeeze, whether that's to the upside or the downside, can occur when we break out of these levels. Now, on a good constructive note, oh, by the way, before I get into the constructive note, this is the expected move for the remainder of the week. So the S&P 500, the SPY, right, it's still expecting a $7 move, right? We closed at 368. So imagine, adding on another $7, that can take us to, roughly right back to the previous swing high over here and potentially even down more towards this gap fill area. So there's still a lot of room for volatility, okay? If you take a look at the SPY on the 15-minute time frame, what is constructive is take a look here how it's trading above all of these anchored VWAPs, including an inclining 5-day moving average, right? 5-day moving average, if you take a look, day 1, 2, 3, 4, 5. So this day is going to get X. So we're going to add on to this day. This means that this is going to kind of still continue to kind of level up. Okay, so it's going to continue to move higher. Now we do have somewhat of a bear flag that is forming, so be aware of that. It looks like it could potentially break down tomorrow given what Tesla looks like, but we'll continue to monitor it because as it stands right now, we're above. And I'll point out what these are. This is the CPI report anchored VWAP, right? So we're above that. It's right here. This red one is actually the October high. Okay, we're above that anchored VWAP. We're above an inclining 5-day moving average. And then this orange one over here, which you can see, this was brought up to Patreon members earlier as we were breaking down to this level. That is the month to date, quarter to date anchored VWAP. And you can see we bounced right from those levels today and started moving up a little bit higher. And where did we stall out at? We stalled out right at that week to date anchored VWAP. Now, most of the time that we've been trading this week, it's really been right around this upper weekly expected move. We got above it, we came back down, right? And then so forth as time progressed. But overall, this is what you want to see. This is actually constructive. It's very choppy and very erratic and very volatile, but it is somewhat constructive right now. And I'll go over some indicators here momentarily to tell you, that it is still holding up. So anything above these levels right now, is in my opinion, like this is, constructive. And then if it starts breaking and holding below these levels, watch out and see how price shapes up, right? Maybe it comes all the way down here and then flushes out more people, but then it might come, do something like that. And we might start getting a rally where we can have a stop up there. Okay. So we got to be very patient here. You shouldn't be rushed to make quick judgments in this market. Now, if you take a look at the Qs, it's also in this chop box over here. Expected move for the remainder of the week is 6.38, so big move there. Has that bear flag as well, but it is constructive overall above an inclining 5-day moving average. And you can see here it is above all those key moving averages. Now, as far as the month to date and quarter to date anchored VWAP, it's been there basically all week. It's that orange line right there. And then it's right there next to the week to date. And it's also obviously right here at the upper weekly expected move. So yeah, we're getting compression right now between all of these not moving averages, but about these important anchored VWAPs, right? So we have the anchored VWAP from the CPI report. We're right there. And it's prices above the October high anchored VWAP right over here, and we bounced from that level today. So you can see here as it stands, we have important levels right here, we have important levels right down here, and price is really just pinging around into these areas. So if price starts breaking down, say these levels right over here, let price do its thing. Maybe it wants to come down, maybe it wants to fill this gap. Okay, cool. Well, let's see how constructive it gets after that point. But just be aware that, we're looking at, the next 2 days, a $6.3 expected move. And that is dynamic. It changes, but that can bring us, once again, 370, 376. That brings us where, right? It could bring us right back up to this prior swing high. And then it could take us also down to this gap fill. Okay, so the door's wide open. And on top of that, it's being compressed. It's coiling up right now. Overall, in these shorter terms, it's in bullish context. But in the longer term, we already know it's in bearish context. Okay, so now the NASD, this is the NASDAQ Summation Index. Check a look. We got that bullish parabolic SAR crossing over. We have the bullish divergence that is somewhat playing out. Okay. There are a lot of, actually, I'm going to just conclude. I'll tell you more about that in the conclusion. But this is so far, that's a bullish sign. So we'll see here if the trend wants to continue or if it is a whipsaw. The BPCOMPQ, we have that bullish divergence right here. It's starting to play out. That is bullish. The buy and sell signal that I like to use is looking at the put to call ratio, the 10-day moving average of the CPC. Still hasn't crossed over, but it's not too far. If it crosses down through it, that would be bullish. The NYSE Summation Index, it looks like it's about to take over tomorrow. I thought it might today. It didn't. The NASDAQ Summation Index did. This one looks like it will tomorrow, so we will come back. Even the buy and sell signal for Bitcoin, albeit Bitcoin price hasn't gone anywhere, and we had this buy and sell whipsaw right over here where, basically ended up flat. It was flat. And then we just recently got a buy signal, but it wasn't actually we haven't got the triggered buy yet. So this is bullish. However, we need the price action of this week to get above the price action of the prior week. Okay, so it has not done that yet. So we'll continue to monitor and watch to see if that does develop. A little warning shot here. We still have the volatility warning kind of triggering off right there. Typically when it does, right, volatility can pop off, and now we're going to kind of see, we've seen a couple hits now in that kind of red flag zone. A bullish development though in the NASDAQ, if you look at the percent of stocks above the 50-day moving average and percent of stocks above the 200-day moving average, you can see price down here is putting in lower lows. However, price action of this line, you can see is putting in a higher low. So bullish divergence, as price was going down, the internals were kind of strengthening. But that's for the NASDAQ. The S&P 500 is the same thing, right? Price is going down, and we had a bullish divergence. And we popped from those levels. So we'll see here if it continues to move higher. Now, going into tomorrow's trading session, right? The Tesla, it's down about 6% off earnings. From what I understood, earnings were good. I'm no, equity analyst. I like to look at technicals and some macro stuff here and there. I'm not going to get too wrapped up into it. These orange lines, though, those are actually important. That is what the market depicted as risk going into earnings. And you can see here, it was about a plus or minus $20 move. And we're not too far off the edge. So we'll see where the market wants to bring us. I listened to the call. The call was weird, to say the least. I'm not going to waste your time. If you listened to it, great. If you didn't, whatever. But to me, it was just, I don't know. It was just weird. Okay, so let's conclude now. So first and foremost, I want to say this. There are some bullish developments taking place. One, the price action above some key levels. We discussed that, okay? So go right back to that chart. Bull price action's bullish. Now, we have some indicators crossing over, also bullish. Okay, the warning signs are high volatility, meaning that these signals can be whipsaws. And then the final thing that I want to just conclude on is that understand that despite seeing all of these things align for the possibility of a rally, what happens when everybody expects there to be a rally and there's not one? People can get caught off guard, and we have a perfect setup for people to get caught off guard. Okay, this is by far the perfect setup. High volatility. We have bullish things taking place underneath the surface. People are expecting the stock market to rally. And what happens? What's the best time to crash a market? It's when everyone thinks it's going to be going up. It's when people start going long and you pull that rug right from out under them. So how do you approach all of this? You be patient. You use smaller positioning sizes. Okay, that's all you need to do. You need to be tactical. Obviously, in this environment, we talked about, like we said, some key levels to watch out for. But once again, we need to continue to be careful as volatility remains trending. That's all I got for you on today's episode.